Good afternoon, everyone. Thanks for joining us today on this Convergent event. It's a Trader Spotlight. We're featuring Anthony Crudele today with us. We're going to go over his history and we're going to talk about his experience and a lot of questions that are relevant to your trading, hopefully. I want to start out by saying derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's see what's going on here. All right. So just a quick intro, 30 seconds. What is Convergent Trading? Convergent Trading is a venture that just launched last week, and its focus is to bring a lot of prop training and trading experience to the public. Basically, it's being offered in two phases. Phase one is the community building portion, where there's a chat room that is treated like a prop room with multiple channels, and in it we discuss the markets. There's no chit chat. There's just market-focused information and multiple webinars a week. In fact, in the last 4 days, we've done 2 impromptu webinars based on the action in the market. The second phase is the full-on emerging trader program, where there's a modular course that traders can go through, the same course that a prop trader would go through to get backed. So this is the first time anywhere that a full-on prop program is available publicly in a virtual space. What is a Trader Spotlight? Trader Spotlight is focused on bringing someone in who trades professionally, and we pick their brain. We look at what their experience has been, how they see the markets, and what's their perspective on various aspects of the market. The goal for today's event is very simple. It is to bring color and a broader perspective to your knowledge and to your view on trading. Our entire existence revolves around traders and trading ourselves. So I'm interested in learning. I'm constantly learning. I'm trading for 17 years, and I'm constantly picking things up. And this gives me a chance to talk to a very prominent figure in the community to learn more about what's next. So let me bring on our guest here, Anthony. Anthony, can you hear us?
I sure can, FD.
Thanks for coming on. I know the weather's not so great in Florida today, and you're still managing to maintain a connection with us. I appreciate your time for being here.
Yeah, thanks for having me. I know it's sunny out, but boy, is it windy. Hard to hit golf balls in this.
What's it doing to your hair? That's the question that everybody's asking.
Well, I have hairspray specifically for days like this, so
awesome.
I was fully prepared.
Awesome. So let's start Anthony's background real quick. He started trading in the CME pit in 1999. Once he put up the money and got trading permissions, he traded for 6 months before he blew up and had to go away and raise another trading stake. He's been trading since then. We're going to pick his brain a little bit about that blow up and some of the aspects of the relevant aspects as to how he made it back and how he managed to maintain a career since then. He's also the host of FuturesRadioShow.com, and I know Anthony because I was interviewed on the show twice. If you go on FuturesRadioShow.com, you'll notice he's done 187 interviews and 30 minisodes. It's just a crazy number of guests. Essentially, the way I look at Anthony, I look at him as the modern-day social media version of the Market Wizards books. He's one of these people that I track, I follow, and I subscribe to his list because he's bringing more, basically the latest information on what others are doing with whom I have no contact. So he's traded exchange managers, algo traders, crypto traders, all kinds of people, some really fascinating interviews. If you're taking a long trip or if you go for long walks or jogs or at the gym, it's a great show to catch. Anthony has also been a crypto trader for how long? Over a year now, right?
Well, I first opened my crypto account just over a year ago, but I haven't been trading for quite a year yet in it.
Okay, very cool. We'll talk about that a little bit. So let's kick in. Hopefully, Anthony, we're not going to give you a headache with all these questions, but we're going to blast right through. We have a lot of them. Let's kick in with the first question here. What got you interested in trading?
Well, fortunately, I was able to start my career on the trading floor and see what it was like to be a trader. So the first thing that got me interested was the lifestyle. I loved it because I was able to come in the morning, all the excitement every single day. It's even to this day, I love hearing the bell. And for the first hour or two, because I was in the S&P, that was basically, we traded the first hour or two every day, at least the traders I was working for. And then we had long lunches. And then, we'd come back for the close. And that was it. And then afterwards, we go to East Bank Club in Chicago. And just, the lifestyle to me, I really didn't think about the money as much because at the time I was just making, clerk's wages. So I wasn't making much money, but I just enjoyed being there. And I really enjoyed the people a lot. I just love traders. I think that we're some of the most fun people to hang around. So I just saw myself in that business. And, that's what initially got me interested. And of course, money as well. I saw the money they were making. And that definitely was important to me as well. But to me, what really got me interested is just the excitement of markets, the people. And as I always say on my Futures Radio show, this is still a people's business. So that's what got me interested.
It definitely is. How have your trading hours changed? You said you traded the first 2 hours and the last closing hour. How has that changed nowadays that you're fully electronic?
Well, now I really wait for the first hour to close. I've talked about this a lot on Twitter and, even on the show a little bit. I watch the first hour now because how we close the first hour is very important to me. So before, I would say the first probably majority of my career, I really didn't, I just traded right when the bell rang, as a scalper, and I did that. But as time has gone on, I've started to be a little bit more patient on the first hour, which was once my bread and butter, because really the order flow, I was really more of a market maker, I would call myself, than a technical trader at the beginning of my career. So as I started to create a strategy for myself, the first hour close became very important to me. So now I trade a lot, really the second hour of trading, and in any market that I'm trading. So if it's whether it's treasuries or whether it's gold, any market, I watch the first hour, and then after that, that's when I trade. That's when I'm the most active.
Very cool. Looking back and having blown up after 6 months from starting, what do you think caused you to still come back with the belief that you can make it? I mean, having to go through a blow up in 6 months, especially in the pit, that must have taken a lot out of you. What made you think that you can come back and still make it?
Well, I blew up several accounts, and the first one was, I went through 25,000 3 times. The first 25,000 was mine, and I've said this many times. I could hear my parents still to this day saying, you should have bought real estate. And instead I put it in a trading account. 6 months later, it was completely gone. But what gave me the belief after blowing out several times is really looking in the mirror and asking myself, who do you want to be? And I know after failing, and I didn't really feel like it was failing. I just felt that I wasn't prepared from the onset. So I looked at it and said, I'm more prepared now after I've gone through $75,000, 50,000 of borrowed money, 25,000 of my own. I really finally felt ready. And I know it sounds crazy, but I looked at myself in the mirror, and I just remember doing this, looking in the mirror and going, who are you? Like, what are you going to be? Are you leaving this industry now? Is that it? What gave me the belief was that I just didn't see myself doing anything else. So that, on top of going through the money and learning from a lot of my mistakes, I just felt that look this is who I am. I just have to make this happen. I really didn't give myself another option. So I feel like I willed myself to eventually figure it out.
Okay. Having failed before you found success, were there mistakes, errors that you made that in hindsight you feel were avoidable? What mistakes did you make that you felt like, wish I had known and I could have avoided them?
Well, the number one thing for me was being a real fierce competitor that I am, was being able to accept the loss. And I fought it because when I got down money, I just get pissed off, and I would do a lot of revenge trades, and that cost me a lot. So I think that was the one mistake I made that was easily avoidable, was even though I had daily limits, the problem was if I was down a little bit, let's just say I fought all day and I'd be down, my limit was maybe $500 at the beginning of my career, and I'd be down $200 and there'd be 20 minutes to go in the day. Next thing you know, I'd be down $600-700. And I'm just like, well, what are you doing? You know, like I couldn't go home down money knowing I couldn't make money that day. You know, it really, I fought it so much that when I go back, or I look back, that cost me so much capital going forward, because those were the days I just didn't have it. Things weren't working, and I just forced it because I didn't want to leave going home down a little bit of money.
How much of that was emotional? How much of that was just you trading you versus you trading what the market's giving you? In other words, it sounds to me like with 20 minutes left, you were swinging for the fences, so you were trading on emotion, right? Or am I off?
Yeah, no, I mean, well, it was the fear of going home not profitable, knowing I have to make money all the time. So when I go back and look at my career, because that was all the money I had, that $25,000 account, and I had a seat lease, and I had to be able to pay to park, take the train, eat lunch. I had so much pressure on myself to feel like I had to perform every day. I also didn't understand that this business, in the trading business, I believe you make money in moments. So I was also trying to make X amount a day, let's just say $500 a day, which ended up being, $10,000 a month, and, planning everything out, trying to make a certain amount every day. So that amount of pressure I was putting on myself towards the close was like, well, I have to make money today. I need to be able to walk out of here. So it was part emotional, but also part playing games that with myself and like trying to perform on a daily basis. It took me a while to learn that when I was making money, that I would have days where I'd make 3, 4, 5 times what I would need to make. And the days that I just wasn't making money or was struggling and things weren't working, that it would even out. I just didn't have the vision to see that at that time.
Mm-hmm. Okay. So you covered some of this a little bit. What takeaways from your struggles do you feel best equipped you for eventual success? What part of the struggle made you who you are? What did you take away from this that equipped you for the success that you're having?
Well, I would say also knowing that I wasn't going to be like anyone else. I had so many mentors and I had so many people around me that were successful in making money. I was basically trying a variety of strategies to trade. And I finally realized that there is no two exact people, and that I had to be a trader. I had to be Anthony Crudele, the trader. I couldn't be like everybody else that was making money. And when I look back, they were all different anyway. But there were some common fundamentals that they all had, and I started to basically put those things into my strategy, and I built something around myself that was working for me, because I was basically trying to be somebody on a different on a daily basis. Well, today I'm trading the trend line. Well, look, we're in an uptrend. I'm buying this. Oh, fibs are working. Oh, they are? Okay. I'm buying 38 back. I mean, I'm an aggressive guy. So anything that someone would say was working for them, I would basically go out and try it. And I was just all over the map. And when I finally just blocked everything out and said, okay, who am I as a trader? What am I comfortable with in my execution? What am I comfortable with in my limits? And then I started to be able to get a log of what my success was in my world. And eventually I was able to build on it.
Mm. We have questions relating to that in a minute, so hold that thought. How often have you felt that you are relearning how to trade during the 19 years that you've been trading? How often have you gone through these rough patches or gone through the process of saying, okay, back to the drawing board, I need to relearn what I'm doing? Have you had that experience?
Absolutely. I love this question because I believe that execution is everything. I believe that you can learn how to execute any strategy. So what I've learned is that over the years, I have a basic strategy that I believe works, okay? And I believe that I can execute that strategy better than the strategy itself. So that's why I don't automate it. And I talk about this a lot because I believe that I could be a better executor of it. So I feel that there's always moments when throughout my career when I've had to adapt to the new kind of market, right? I mean, like I said, originally I would trade almost every tick. That's just how I was. I would just, at the beginning of my career, I was a scalper. And then I evolved into trading, bigger at important areas. And then I evolved into trading, medium size at important areas and scaling. And then it was smaller for a little bit longer term areas. And there's been all sorts of different times where I felt the market called for me to execute a little bit differently. And it was from my experience, seeing how this type of market in the past, because I do believe that it repeats itself. And after I call it putting it in my arsenal, all of those years that I was trading, like different markets come back. So I feel like my strategy has stayed the same from when I originally developed it, which was, I think it was like 2002, 2003. But the way I execute it is always been adapting to what the market's called for. So if that makes sense. So I feel like, go ahead.
Sorry, by that you mean, high volatility versus low volatility, a bull regime versus a bear regime. You're just basically modifying that baseline plan for whatever happens to be going on. And by modifying it, we're talking about execution-wise rather than your approach and your way of organizing the market, so to speak. Is that accurate or no?
Exactly. So let me give an example. So when I believe that a market's in a primary trend, up or down, let's just say in a bull market, I look at my buy signals more aggressively and I buy at and above prices, at and above my levels in bull markets. In bear markets, I sell more aggressively at my short areas and I sell at and below prices to get in. So let's just say, for example, let's just say, obviously the S&P's primarily been in a bull trend for a while now. When I get a buy signal, let's just say the price is 27.15 quarter, which was something I was looking at today. We're above all the moving averages. I believe I'm more aggressive on the buy side than to be on the short side. I start buying in front of that area because I believe that there's going to be a less likelihood of me being able to get prices at or below my entry. So I'm trying to get in a little bit smaller in front of it because it's a bull trend. So if it goes down,
how far ahead of that price? So 27.15 to buy. How far ahead of it do you start accumulating your position?
it depends on my risk and it depends on my target. So, for example, there's a perfect example is yesterday. I said if we close the first hour above 15 quarter, I believe we would trade 34. So we closed in the mid-20s. I don't remember exactly where it was, but it was like, okay, I'm too far above it now. I mean, typically what I'll give myself in terms of risk
strategy
is, I'm getting alerts right now, but as I would get that confirmation, okay, I want to be a buyer now. My stop has to be typically, it's usually around 50% of what my target would be. So if I start buying them, and I can start buying them when I feel I'm close to 1-to-1 to my target versus my stop. That's because obviously I don't want to be outside of that risk parameter. I'm not going to buy 28 evens in the S&P to sell 34s when I know I have to risk all the way down well below 15 quarter. Right. So I try to buy them where I start feeling that, okay, if I start buying them here, if it goes against me, I can continue to add. And I know that if it goes my way, I still have enough that if I believe it will hit my potential target, that I have room to potentially cover even a little bit in front of the target.
Okay.
So it's depending on my stop and where I think they can go.
Okay. I'm going to push this along a little bit quicker just to make sure we stay on time. But what is your current trading time frame?
I use hourly charts for all of my indications. Okay. And I use shorter term time frames to help me execute them.
So you're looking at hourly for the setup, and you're looking for the a shorter time frame, like 15 or 5 minutes or something, for the actual entry point. Is that what you're saying?
Yeah. So right now I'm using I always use 60 minutes as my bias of direction, and then I'll look at my 5-minute levels, and I have a 3-minute chart up right now, and I'll sometimes shift that. The busier we are, I can go a little bit of a shorter time frame, but right now I feel like we're kind of in a sweet spot where 5 and 3 minutes are good. So I'm using those charts, solely those charts. I'm using the same indicator that gave me the indication on the 60-minute. So I don't change any indicators or anything like that, and I use that's it. And so okay. when we pull back into those levels for example yesterday, I look to see if 5-minute coincides with 3-minute, and then potentially coincides with my 60-minute. And once I see them all coinciding, those are my entries. Okay.
And how long, once you're in, generally speaking, how long are you holding positions for?
Well, as long as it takes for the final target to be reached. But I don't go beyond a day. I mean, typically I'm hoping that it'll happen, the reaction will happen right away to where I will trade a little bit bigger on the onset, take some off once I get to I'll use my 3 or 5-minute levels. Once we hit the first level there, I will take a portion of the position off to be able to lock in some profit. And then I leave trailer to go to the final targets, and I'll try and hold that as long as it takes. Unless there's a confirmation, something else happening, which would be, a headline or something comes out of the market that's all of a sudden changing my reason not to hold that position, then I would cover sooner. But if not, I try and hold.
All right, and again with a trading style question, which products are you most active in?
Definitely S&P 5-year and 10-year Ultra are my top 3, and then probably goes down to, I trade the dollar and gold, and then maybe 30-year after that, and then really not much else after going down the list. I mean, I will trade crude oil every now and then, but it's rare. And I trade that more on a swing position than I do day trade. Okay.
And how has your trading changed in recent years? Now, from 2008, 2009, the correction there, we had really good volatility 2008, 2009, and then the market started grinding up from 2012 onwards, basically in this massive rally. How has that impacted the way you trade?
Once again, it just purely is based on the conditions. So because I've seen bull markets and because I've seen bear markets and because I've seen range markets, so what's changed over the past several years is because we're in a bull market. In the S&P, as I said, that's my primary market. And actually in the bond, I would say, well, let's say treasuries and 10-year and 5-year have been pretty much, I would say, in somewhat of a bear market as of late. So I'm trading those based upon those conditions. So my style is it's come back to trading those types of environments. So S&P, I'm much more patient on the short side. I rarely will look to sell into any sort of breakout to the downside. I definitely look more to buy dips when they're available, when they come, if they come. And on rallies, when we're above all the daily moving averages and I get short signals, I'm just much smaller and just more cautious. And the opposite goes for treasuries. Right now in treasuries, any big move higher, I wait for those days. Those are the days I trade the most aggressive to the short side.
Okay. How have you adapted new tools or a new approach to deal with the lower volatility we've seen in the last several years? That ties in with the last question. Have you had to, you know, use different things, maybe add some order flow type uh, tools or anything like that, or is it still the same, just a different, like you said, different style of execution given the regime that we're in?
I use moving averages now more than I ever have, and I use less order flow because order flow keeps me too active. I believe in this environment I need to be less active because more active for me has hurt me. So what I do is I have a moving average and a 5-minute and a 3-minute, and if we are in a buy and we're above both, I'm comfortable holding along, and I'm comfortable being more aggressive on buying dips when they get to my levels, and vice versa if we're below these moving averages, because I've just noticed that markets that they trend more right now. So I'm doing everything I can to stay less active and to have a stronger hand in the market when I do get it.
Hmm. Okay, and when you were talking about indicators a little bit earlier, you just mentioned moving averages. Is that your main? Would you call yourself a moving average kind of connoisseur? Is that your main indicator that you trade off of?
No. Well, I created my own indicator, and that creates levels. And I look at the response to those levels, and I look at longer term, and I work my way down to the shorter term. So I initially look at a daily and a weekly. Where are we at my support and resistance levels? Are they reacting to them? And how are they reacting to them? Are they reacting to them in a strong manner? Are they just sitting around them on daily and weekly levels? That then gives me a good idea of what I think the day will trade like. Because if we aren't responding, or if we're just chopping around middle levels or higher levels, I've learned that my shorter term stuff is going to be it's just not going to work as well. So I use my 60 minutes to confirm what I'm seeing really in the daily, and then I use the short-term ones to execute more on my time frame.
Got it. Okay. What's your favorite source of pre-market information when you're doing your pre-market prep? Where do you go to get the pulse on what's going on, or is that even relevant?
Well, I read every morning before I begin to trade. I read Reuters gives a free, basically, newsletter, and I read it because it's very basic and it's really non-political. It just comes in and tells me what's happening. So I get a really good idea of what's happening in the market from data and all sorts of different things. I actually read the Bloomberg's. It's like the five things you should read for the day. I typically read those just to get an idea of what is being talked about on the terminals. I mean, Bloomberg's got so many terminals, and they have all the pros, and so those are the articles that they're pushing. So I do read those as well. And then I actually read the CNBC one, which is very basic, and I do that because I want to get a sense of what the professionals are thinking on the Bloomberg and what's happening generally in the Reuters. It's a very quick read, and then I look to see what CNBC is telling retail, and then I develop a theme from it. So if all of them are talking about, let's just say Facebook, or everybody's talking about a specific earnings, or everybody's talking about a specific data point, and then I know that there's going to be more bodies that are going to be looking at that, and that's going to have a bigger impact. So I don't use that for a trade decision, but I just basically am aware of it just in case it's impacting the market that day, and I don't want to get caught, not knowing it.
Okay. I'd appreciate it if you can, before, after we get off here, I'd love to get a link to that Reuters free newsletter so the folks here can also subscribe to it, since it's, I guess, open to the public, right?
Yeah, it's free. It's a great piece. Cool. I'll send you the link for sure.
Very cool. What is your favorite trading setup, and how often do you see it?
My favorite trading setup is actually a mean reversion setup after a big move that is still within trend, meaning that it's a mean reversion setup on a shorter time frame, but on a bigger picture time frame, it's a move against trend to go back with trend. Does that make sense? So like if the primary trend is up and I see a big move down, I can't wait to buy that when I get my 60-minute long setup, because the primary trend is still up and we finally got a pullback that we waited for. Vice versa goes for the short side. That's the trade I love the most, and that's the trade that I don't get that trade that often, because typically when you have trend markets like we have been, you don't see the big moves back into trend that come off of them rapidly, and they're just fewer and far between.
Got it. Okay. If one was to look at your equity growth curve, we're all looking at your trading account over history, and assuming you never take any money out, is it a smooth growing curve? Like this is what I saw scalping for myself and all of my traders. It's fairly smooth because you're taking so many trades with small risk. Or would it be one where it would plateau and then you would have runs where the market gives you the conditions that are conducive to your trading style? How has that been for you? Has it been more smooth, or has it been kind of, I'm grinding along and every once in a while I'm going to get the type of cycle or the type of regime that supports my plan, and then all of a sudden I'm making a good part of my income for the year during that period of time?
Oh, I'm definitely a moments guy. For me, I've made my best years, my best months, my best weeks come in moments that all of a sudden everything's just there, and I've learned just to pound those moments. I mean, that's one thing I've never really had an issue with, is that once I see that things are working, I have no problem going all in. So let's just say a normal day, my risk parameters are lower because I know that there's not a lot going on. So as a day trader, I wait for the times to where everything is lined up to really put out all my risk. So I don't really have the same risk parameter every day. So if you looked at me over my career, you probably see days, I mean, gosh, when it was really busy where, I'd be up or down maybe 500 or $1,000, and all of a sudden one day you'd see me make $50,000. And it just was like, how did that happen? Well, it was just because that day I was ready just to pounce on them, because I knew everything was lining up for me. And I just learned that for me psychologically, that's helped me by knowing that that's who I am. Because when I try to grind and make money every day, I overtrade. And I just go back to what I end up basically just churn. And that's just over my career, that's not worked for me. So I'm definitely someone who I wait for moments, and I learn to be able to just seize those moments, because that's the time I have the money in the account to put it out there and try and make money.
And so what that requires of you is to be there to be there every day, or, not every day, but on days that fit your plan. You can't just kind of show up one day and just go all in, right? You have to see the story or be in alignment with the narrative over a long period of time. And that is, that might be giving you the confidence to go all in when it's time to go all in. Is that correct?
I believe you have to continue your relationship with the market. I don't trade every day. And even though I'm not trading, I feel mentally engaged as if I am. So I look at everything that's going on, and I can tell from the way the market is moving based upon its reaction to my strategy that it's my time or it's not my time. So it doesn't necessarily mean that the market has to get really busy either. So I think this is also something that people, I think, need to understand about themselves and their strategies. My best days and weeks and months and years, really, obviously there are certain times where if it's volatile all the time, yeah, that's great, okay, because the opportunities, the price opportunity is there. It's slower, you just have less price opportunity. But over the course of my career, it's just been at times where my strategy is working really well, and I recognize that moment. It's not necessarily that the market has to be busy. Like today was somewhat of a busy day, so was yesterday. I really didn't do much. So it's not that the market's busy, it's just how is it reacting and what opportunities are coming to me through my strategy.
So what kind of busy rather than just busy? right?
Busy meaning that the reactions, it just hits my level and bing, it comes off of it. We're within trend. It's the daily, the 60, and my short-term charts are lining up. Or if it's a buy, we're hitting it, getting above moving averages, and it's extending. So like I could see that from like just looking at the prior setups on my short-term charts. Has it been rotating off of our levels? And I could see on the 60 minutes chart that the levels have been working. So I see that the reaction to my strategy is strong. It's good. You know, when I see the market oscillating around prices that are important to me, that's right there for me is a big red flag that's saying, hey, man, you better take it easy because they're not reacting to your levels. So that's what's important to me is the reaction to what it is that I'm watching.
Okay. Futures radio show. What got you started on doing a trading podcast? How did that start?
So I was doing, I believe it was CNBC one morning. It might have been Fox Business News, but I believe it was CNBC. And I got off, and I remember they were asking me something along the lines of about ISM or something like that. And I just remember, and I was on the floor seeing me at the time when I was doing the TV hit, and afterwards everyone was like, "Oh, that was a good hit," you know, whatever, after you come off the live TV. And I was like, well, it's not really what I would have asked, but I think that, they don't really ask us futures guys anything that pertains to futures traders. So the production people around me were like, well, really? Well, what do you think we should be asking, so on and so forth? And I basically took that moment and I said, you know what? Podcasting is new, kind of. This is 4 years ago. No one really was out there doing it. I said, let me basically bring some of my friends in and let me ask some of these questions. And then I approached CME Group about sponsoring it. I said, here's my idea.
Well, you have some big sponsors. I mean, you have CME Group, you have Trading Technologies, which is the maker of XTrader and XTrader Pro. Those are big names.
Yeah, I mean, RJO Futures and Top Step Trader too. So I went to CME initially, and I said, look, would you consider sponsoring this? I'm going on TV. They're not asking me about futures. I believe that I know a lot of traders that I could bring on and people to talk about this industry. I've been in this industry my whole life. What do you think? Worked it out. Okay. Year goes by, we look back at it, learned a lot, next thing you know, it became a show, cool. So it was one of those things I just kind of fell into.
Okay. All right. So this is a little bit of a brain picker here. Can you think of some of the gems that have come up during your interviews that have had a lasting impact on you or your trading? I'm sure through your interviews you've had, more than once probably have had an aha moment, something that was impactful enough to your own thinking that it changed how you trade or how you looked at something relating to trading. Have you had those moments?
I have a lot of aha moments probably because a lot of my guests are a lot smarter than I am about things in the industry that I didn't understand. But I think that one thing in regard to an aha moment was when I remember, I believe it was Dave Ripley. He's now the COO of Kraken. He talked to me about blockchain. It was actually prior to my interview with him on Futures Radio Show. I was at an FIA conference. This was over 2 years ago. And I heard him speak about blockchain technology and the impact it was going to have. And I was just like, wow, this is a game changer, man. I mean, why is nobody else talking about this? That was definitely an aha moment for me where I was like, wow, this is going to change the industry. I didn't know how, but I felt it was like, wow, I have to start looking into this. Mm-hmm. But something that's resonated with me over the course of, I would say, the last year and a half was something that I already had known about trading, but this reinforced it. And this is a very important thing for me. It was that big picture supersedes short term. I bring on a lot of people that either manage money in the futures industry, that are trend followers, and they look at the market, similar to us in a lot of ways, but because they're not as active, their mindset is a little bit different in the way that they execute, of course, right? Because it's just not the same. And when we get to critical areas, I've always looked at highs and lows when we break out. I'm always looking for that little bit of extra gravy if I'm into a position, and I'm always quick out after a new high or low is made, or if we're crossing a 200-day moving average or something that I believe has big picture importance. I would always be in that little shimmy shake after that high or low was made, and then all of a sudden the market would move big and continue to move big in that direction. And what I learned was from doing so many interviews was that these people are later to the scene than we are. I'm there right away. I'm looking for the move to happen right away. And if it makes a new low or a new high and it comes right back into the range, I'm always quick to be out of my position, especially if it's near an area of my strategy. And I never really hold that runner through. What I've learned to do, even more so than I did earlier in my career, was that if I believe that area has big picture implications and I've already got a trade on that's a winner into that area, I just scale it back down and I try to hold it for a longer period, a longer target I have. So that's something that's resonated with me, is just thinking about what the bigger picture people are doing when we get to bigger areas.
So what you're saying based on that is, because you are looking at things on a shorter time frame, you're getting in and out when the bigger time frame, who's also looking at your trade in your direction, are getting in later, and by the time you get out, that's when they're actually reacting, because they're using a slower indicator, slower indication to enter. Okay, that's very good. What are your biggest pet peeves when it comes to trading? These are things you hear others say relating to trading that make you cringe. You tweeted one, but I'll let you answer.
What was the one that I tweeted?
You said, I think it was yesterday. No, was it yesterday or the day before? The market sold off. I believe it was Monday. You said, oh, yeah. You love how everyone has to come up with an explanation for every market drop, and that it is pointless.
There's just no accountability. And there's just no accountability beyond it. It's like, today we're down because of Facebook. Yeah, that may be true, but the next day if we're up and Facebook is down, are we up because of what? I mean, that is something that obviously does bother me, because I just think it's bad education for newer traders that don't understand that, yeah, it might have a short-term impact, but you still have to go back to what you're doing, and you just can't be, piling in short NASDAQ today because you think that because Facebook's going down, that's ultimately, the reason why the market's going to go down and stay down. And Facebook gets below its 200-day moving average and whatever. But a pet peeve of mine that I think is something that really does bother me is when people say, never add to a loser. That's one of the rules they have. You know how many losers I've added to in my career? I don't know how someone could be in this business and expect their first entry to be so good that they never add to that trade when it's against them. It just blows my mind, because I have a range of execution. There's no possible way I have ever picked. I said this before. If we're in a bull market and I want to be long, I buy small first in front of my area to hopefully get a price opportunity closer to where I want to buy them, and then I'll buy them bigger, but I'm adding to a trade that's a losing position at that moment. But I have a range of execution. Anybody who believes that they could find the perfect entry that they're going to get all of their position in and never add when it goes against them, I just think that that's just the worst advice out there, and it's never made sense to me.
So that advice is intended for those who are all in, all out, and mainly online traders who trade for themselves. What you're talking about, which is what most professionals do, is you are scaling in, scaling out. Scaling in and averaging down or adding to a loser are two different ball games. You're coming in with a plan that you are going to keep buying on a falling market within a range, a preset range with a preset risk limit. I think that advice is more for, the market's gone against me and I bought them higher, now they're lower. This is a better price. I'm just going to keep adding. I don't have a plan for this trade, but I'm just going to keep adding. And that's intended, I believe, to keep people out of trouble. But most professionals aren't, all in, all out. Most professionals are working a position around a zone. They don't trade. People don't trade a level. They trade a zone, at least in my experience. And that goes for spreaders. It goes for option traders even. That's the case. The next question relates to a new category called to trade as a career. And I think it's of special interest to those listening in. If you were backing a new trader, what do you think is the minimum amount of capital you would have to put up?
If I was backing a trader, the minimum amount of capital I would have to put up. Well, I backed several traders over the years, only personal friends of people that I know. When I sit back and I think about that right now, the minimum amount, so let me put it this way. I would put up, I believe, the amount of capital it needs for them to be able to trade a minimum of 3 contracts without using, any sort of day margin. So let's just say if the margin's $5,000, just to make it simple. They need to be able to trade comfortably 3 lots. So let's just say 15,000, and let's tack on another 10,000 to make sure that they're not, below that 15,000 number right away. So let's just say $25,000, and to give them the ability to trade 3 contracts, because I truly believe that learning how to trade by just trading 1 lots is too difficult, because you need to be able to identify when you're trading closer to a stop that potentially you can trade multiple contracts and still be within your risk per trade without having to think about it. Because if you're only a 1-lot trader, you have to pick a perfect price. This goes back to adding to losers to me. I'm never going to pick the perfect price to get in. I need to have a range, and I need to have a risk parameter tacked onto that range. So there's 2 parts to it. So if I am backing someone, I believe that they need to have enough money to be able to know when to trade small, a 1-lot, because maybe that's the only price they feel they can get, or that's the price they're going to take, or it's because it's a wider stop, or they could be able to trade 2 or 3 contracts closer to the stop, potentially risking the same amount they were risking on that 1-lot with a wider stop.
Okay,
that's what I believe.
That makes sense. So for everybody that's listening, the current margin, the current exchange margin for the ES right now is $6,380 per contract. So in this case, it would be closer to, what is that, $19,000 for the 3 contracts. And what's funny is every person I backed, I put up $25,000, which is the number you hit. And I've always said that that's really what you need to do this in a way that is career sustainable, because the odds of being able to take as many trades as you can, so you can learn. You could sit in front of the screen for 10,000 hours, from that Tipping Point book. It won't teach you as much as executing 1,000 trades or something like that. And for that, you do need capital, and you need to be able to live through your mistakes. So arriving at the 25,000 is interesting. And I do recommend, just like you, to trade the full exchange margin per contract. Now, the notional value of the S&P, where it is now at 2,700, is $2,700 times 50. That's the value of the S&P. You don't have to have that to trade it, but putting up the exchange margin is a good place to start. Next question, how long would you give it before you expect this trader to start turning a profit in your prop account? What is a reasonable amount of time you would give someone who's tying up your $25,000 to make a turn and to start making money? What would you anticipate?
No less than a year.
No less than a year.
No way for me. I mean, because I just don't believe that they've seen enough in a short amount of time, in 3, 4, 5, 6 months, to have any. I need to see how they're reacting to market changes. They need to be able to, when they're trading live money, I believe that they're going to go through, a lot during a 12 months period. They're going to see several different types of markets during that time. And from that point, I believe that they can now go back and say, hey, I remember this is how I reacted then. And they start building themselves up, their confidence to be able to execute better. So for me, if it's my dollar, I look at it and say, I'm giving this money to this person. I don't expect them to start turning the corner and making money for a year at least.
And that's under your supervision?
Yeah, absolutely. I mean, I think that, if they do it sooner, great. Then you've got someone who gets it sooner. But I would set my expectations at a year. I'm not saying it will take someone that long. It could take someone a shorter period of time. My expectations, I wouldn't set myself up for failure on that person to say they're going to be able to, turn a profit in 3 months. I mean, it also depends on their experience. I mean, I'm talking about someone who's never traded, who's done nothing, and they're going into this. I mean, I think that they need some trial and error. If they've been demoing for a period of months, if they've been sitting with me for a period of months prior to that, then maybe I would take that time a little bit down. But if it's from day one, I would say 12 months.
What's the product you'd put them on?
I would say it's based upon their personality. I would never pick a product for anyone because I don't believe that anyone can choose a product until they identify who they are as a trader. Like, I struggle with, this is why I don't trade a ton of crude oil. I don't trade a lot of gold. I don't trade a lot of like Russell or NASDAQ because the way they move does not fit my personality. I like price response when it hits a level it means a lot to me. So I like treasuries more and S&P because the books are thicker. Some people don't like that, but I could trade as big as I want. I'm never going to get bigger than the book. And I also know that when it hits a level, the meaning of the response is greater. I look at that NASDAQ, it hits a level, it comes off it before I could even get in, and I'm pretty fast, or it goes through a level, 10 handles, and comes back through it, and it's like, okay, did that work? So I don't like too much fluctuation. I like just enough, and I think that for any person out there, you just heard what I like. You have to see what you like. Some people like that, those markets that move really fast. I just think that you have to identify as a person and not let anyone tell you what you should be trading and what fits best into your profile.
Okay. We're running out of time, and I've been injecting the questions that have been coming along in the conversation. So we're going to try to speed things up a little bit. I'm going to give you a scenario. A very dear person to you, say your son, daughter, niece, nephew, somebody who's really, really important to you, comes to you and says they want to learn to trade. What would you prescribe to them in order to make it as quick and productive a path as possible? How would you tell them to approach the markets?
Well, it goes back to my experience. I would say, how competitive are you? Are you able to accept loss? I would basically speak to them and find out what I think are important characteristics that they need. They can be competitive. We want that. I'd want that. But I also want them to know that when they lose, to lose with dignity and, not be a sore loser. I think sore losers struggle in this business. I mean, that would be the number one thing I would find out first. And, what's their temperament? How do they react under pressure? Go play golf with them if they play a sport. See how they play or react when they're in a tournament. See how they react when you're playing for money. And I would do that type of evaluation. And I would say learn how to deal with that type of pressure, because what you think you are prior to dealing with pressure is not really who you are.
Okay. What characteristics, if you had to put out a job ad for being financially backed by Anthony Crudele, what are the characteristics or attributes you would be looking for in a trader?
So let me use an athlete, because I think that this is probably the easiest way. So like, you look at Tiger Woods. He's coming back. He's the easiest person for me to say this guy would be a great trader. Why? He's super competitive. Number one, he doesn't like to lose, but when he's wrong, you see him the other day. I mean, obviously he gets a little bit mad, but he gets composed quick. Okay, that to me is very important. That's the number one trait I want to see as a trader. Yes, you want to win. Yes, you want to have that spirit of winning, the competitiveness. But when things don't go your way, how do you react? Because it's not the trade you made that lost money that gets you out of this business. It's what you do after that happened, at least in my experience.
Okay. That's a good one. Lightning round. Let's talk crypto for a minute. What coins have you gotten involved in the past?
I've bought Bitcoin, Litecoin, and Ethereum.
Okay. When did you get involved in blockchain and crypto? When was your first, you said you've been looking at them for some time, but you didn't trade them until some point within the last year. When did you get involved?
The first week of August is when I made my first trades, and I bought Bitcoin then.
Okay.
Of last year, 2017.
Why did you decide to get in? Was it all the hype, or did you see something, know something?
Well, you know what it was is I just kept kicking the can down the road, and what made me finally decide to get in was just I said, just buy a small amount, see what it feels like to be in. Once I got the feel for it, I started to trade it a little bit more actively. So it was just kind of like my moment to be like, okay, just do it.
Okay. And what's been the outcome so far? So assuming you got in August, you're still holding up pretty good.
Well, no, I haven't hold them. I didn't hold them. Then this is where it comes into. Believe me, I wish I did.
Okay.
No, but so I think the future side of me hurt me for this because I saw gains right away when I bought Bitcoin. So I got out, and then I bought it again, and then I got out, and then I bought it again and got out. And I was making little bits and pieces along the way because I had no way to understand how high or far it could go. I had no vision for it. I was purely trading it on a basis where it's like, okay, go what my way, I'm covering. And I was doing some charting for it. And I was just looking at it going, this is just, I have no idea where this thing can go. And every time I was covering, I'm like, okay, let me wait to buy them back lower. And it just kept exploding. So I kept trying to buy pullbacks. And I just, every time they go my way, I'd cover. So I think as a futures trader, as someone who's been a day trader, that's why I don't do my own investments. When it comes to my personal stuff is because the day trader in me, the futures trader in me hurt me in this. And the outcome has been I've made a little bit of money buying dips, and that's about it.
Okay, very cool. What coins, alts are you looking at currently? Are you thinking of jumping in into, Neo or, Zcoin or something like that? Is there anything that's on your radar right now, or have you kind of looked away for the moment?
Well, I'm always looking at it, but the problem is everything that I've been looking at lately has been giving me a short setup. So really now I've learned that, okay, I'm going to be just buying these based upon the chart. I stopped looking at names. So what I was doing was just scanning a few of the majors, a handful or more from Bitcoin, Bitcoin Cash, Ethereum, Ripple, like you named some as well. And I'm waiting for chart patterns that make sense for me to buy them. And I'm going to try and just execute, them based off the chart pattern, not necessarily off of buying, holding a name because I think it'll be something.
Okay. What is your outlook on crypto trading, crypto for trading? Just trading.
I think it's going to be huge. I think it's going to be really big. I think that it's the new frontier. We don't know what it's going to be. I think that now that it's on TT is huge. I'm looking forward to trading it more actively now that TT has it as well because it's right in my backyard. It's something I've used for many years. I didn't like any of the execution platforms prior to TT. Thought they were really junky, but now that TT is getting involved, I just think that, I think it's going to be really big. I don't know how big, but I do believe as an electronic trader, I look at it and I just say I'm just going to start trading a pattern. Before I was like trying to buy Bitcoin. Oh, Ethereum's going to be the one. And I'm just looking at it. I was just going about this the wrong way. Stick to what I know, trade it. And that's it. And I just think that they're going to be an asset class that people trade.
Do you think investing-wise it's the same? It's something that blockchain is something that people should have in their portfolio at some point?
I do. But, I think it depends on each different person. But, for me, this goes back to me being a futures trader has hurt me on this aspect. I do believe I do want to own something of blockchain. Am I just going to own Bitcoin and just sit there and watch the price action and forget about it? I'm not built that way, FT, but I guess in some ways I have to retrain myself and maybe just devote a few bucks to it. But it's one of those things. It's just, I am trying to do that, but I just haven't done it yet.
Cool. if you weren't making money on owning coins themselves, would you be bullish, long-term bullish in the technology? I mean, what we have here is just a race with 1,000 different coins, and any one of them could be the next currency. Do you think this is, at this point in time, even if you're not in a coin, Bitcoin or Ethereum or whatever, do you think the overall technology is something you would be bullish on? It sounds like you would be.
100%. I have almost no doubt in my mind. Maybe that's why it won't work, but I am around people at all of these shows. For a majority of my career in this industry, I was only around traders, and we all know how traders are. We're skeptical of everything. It's just kind of the way we're, at least my circle, it's kind of how we're built. You always look at everything, oh, this stock can't keep going higher, and whatever. But the technology itself, and I surround myself by people that are much smarter than I am, and when I travel shows and I talk to people, I just don't see this going away, and they're investing real money into it. So in my opinion, it's here to stay, and it's only going to gain ground from here.
Okay. That wraps it up. I hope you're you held up really good there. You're on top of it. I hope that everybody was able to keep up and gain some insight from a professional trader with a lot of experience. Anthony, there were some questions. We did ask the questions as we went along that we felt were relevant. If your question was not answered, we're going to scour through the questions and see if we can answer them to you individually. But I want to take a moment, since our time is up, and just express my deepest gratitude and appreciation for you taking the time to share your wisdom with us. You've been awesome. I know this is not something you do typically, so I appreciate you coming on.
Morad, for you anytime. I wish you all the best with Convergent Trading, and I know it'll be great because I've had you on the show. I've spoken with you many a times. You're a great person. I really appreciate you, everything you do for the trading community, and you're welcome on my show anytime, and I'd love to come back and do this again with you.
Awesome. Thanks a lot. Okay, everybody. For those of you who want to keep following Anthony's work, please take a look at futuresradioshow.com. The reason I'm plugging it here is not because he pays me, he doesn't. It's because I've learned a lot from the interviews. I mean, some of the interviews he's done with, especially on crypto, have been very, very interesting. I mean, these people are very, very knowledgeable, and they're deep into it. I suggest you go to futuresradioshow.com, futuresradioshow.com, and just grab a few episodes that look interesting to you. Also, you can follow Anthony on Twitter. He's an interesting follow because he'll talk about the market, but also a lot about golf and his hair. At twitter.com/Anthony Crudele, twitter.com/Anthony Crudele. The links will be in the show notes on the site once the video is posted. The broadcast is recorded, and it will be sent to you via email, so you have a chance to go back and review it. Anthony, thanks again for coming on, and thanks to everybody for being with us this evening. Take care.